So that being said, let's just jump right into the opening keynote here. Greg Anton, he's the past chairman of the AICPA. He's a market leader for Colorado and Wyoming, doing some stuff there. Throughout his career, Greg has provided accounting, auditing, and advisory services to all kinds of different industries. He believes in fostering long-term relationships with his clients, his dedication to their total business needs, and go way beyond traditional accounting and auditing services. He's been a guest on What's Your And podcast, and I'll let him share about that if he wants to admit it. And everybody put your hands together virtually for Greg Anton. It's all you, Greg.
Hey, thanks so much, John. I'm going to get into the screen share navigation right now, and we'll make that work, hopefully. And you should all see that.
Looks good, Greg.
Thank you so much, John. So one thing I'd like to, I'm going to ask some questions actually of you, not you, John, but others, the participants. When I do, use the chat for answering the questions that I throw out to you. I'm just going to be doing, they're going to be doing traditional polling, but I'm going to be doing some non-traditional polling as we go throughout the presentation. And as John mentioned, this is really life lessons in leadership from my personal story on the front end. And then I'm going to talk about very high level tax implications and tax policy and how the US government's finances are going to impact tax policy going forward. And then conclude with some technological advances that I think are impacting the tax profession, the profession as a whole, and how to navigate those throughout your career. So with that, if we're going to talk about life lessons in leadership, how better to start than in your elementary school? So this is where I actually went to first, second, third, and fourth grade, a four-room schoolhouse, and it was in Canton, Massachusetts. I grew up in Massachusetts and then found my way west. But in this four-room schoolhouse, these are where some real formidable life lessons were formed early, obviously early in first through fourth grade. But in second grade, my teachers started realizing that this kid is really not that smart. And I was struggling with reading, with writing, and particularly with spelling, but I was too proud to get tested or to go into the special, where the green dot is, or the green arrow you see in the school building. That's where they would send kids that were having trouble learning. And I just was too proud to end up there. So I pushed hard against, I'm fine. And then ultimately in third grade, my third grade teacher tested the entire classroom for learning disabilities. And they determined that I had severe dyslexia. Not like normal dyslexia where you mix up numbers and you have difficulty reading, but I could not write cursive. My brain, and I know writing cursive for most of you isn't something you need to do anymore, but my brain didn't work to go from my brain to my hand to learn how to write cursive. Today, I still spell at a second grade level. One of the questions I have for all of my assistants that I've worked with over the years is, have you won a spelling bee? If they've won a spelling bee, they can fit in with me just perfectly. But here's the life lessons I learned as a result of that. If you're not willing to take on and conquer the challenge, you'll never have the opportunity to succeed. And to say it another way, if you're not willing to try and fail, you'll never have the opportunity to have ultimate success. And I really think that failure in life is not something that you should try to avoid. But if you're going to fail, you should fail fast and learn from those failures going forward. I learned that very, very, very early as a result of the real significant learning challenges that I had as a kid. So the next life lesson. Obviously at the top I've written, if you can ski here, you can ski anywhere. In Canton, Massachusetts, right up the street from my house, was a little ski hill. And 309 vertical feet, 8 runs, 1 chairlift. And I say dream big. Dream big, anything is possible. When I was skiing at this little ski hill and struggling with learning, I said to my friends, I'm going to college in Colorado. I will go to college. And this is a kid that failed virtually every test they ever took all the way through middle school. I'm going to college. I'm going to find a way to do it. And this is the life lesson from this experience. Dream big, anything is possible. Write down your dreams. If you write down your dreams, they become goals. And I think everybody should do goal planning, personally and professionally. If there's one takeaway that you have from this hour that we have together, at the end of today, write down your dreams. They'll become your goals. And then most importantly, like I did on the chairlift, where I shared with my friends that I was going to go to college in Colorado, share your dreams and your goals with others. And there's 2 reasons that you do that. One, they'll hold you personally accountable. They will hold you personally accountable, and you will hold yourself personally accountable. And then really the other reason is somebody that you share your dreams with might be able to help you accomplish those goals and those dreams. Dream big, anything's possible. Write down your dreams, they become goals. Share your goals with others, they'll help hold you accountable to them. The next life lesson. We moved when I was in 5th grade to the town adjacent to Canton in Sharon, Massachusetts. Oh, we got a polling question here. It looks like an easy one. I don't know who the 15% are out there that don't think I have dyslexia, but trust me, I do. All right, so this is the town that I moved to in 5th grade, and it taught me about perception, and perception may not be reality. If you look at this little town, this is out in front of where I grew up. I grew up on a little lake called Lake Massapauga. We actually used to take the boat across from where we grew up, across the lake, and our high school was on the public docks on the other side of the lake. But 20 miles south of Boston is this beautiful oasis, this beautiful pond. There were 4 camps around this, I would call it a pond, but it's really a lake. There were 4 camps there. And when I would get out and I would talk to people about growing up just south of Boston, and I grew up on a lake, and I grew up around these ponds, they didn't believe it when I would show them pictures of what life was like 20 miles south of Boston. The reality is, when you talk to people about growing up near a large city, their perception is not a lake with boats, with fishing, with camping, with sailing, and all of the outdoor activities. So one of the large lessons and life lessons from this point in my life was, you don't know what you don't know. And your perception is based on your base of knowledge and your unconscious bias of what you've seen and what you've been told. And you must open your mind up to other people's experiences, other people's perceptions. And most importantly, when you're conducting business, it's really critical to bring lots of people to the table that have different views and different perceptions than you to get to solid decision making. The next life lesson. This is the camp that I actually went to and then worked at, Sharon Country Day Camp. I learned about work-life integration. We all talk about it today as work-life balance. And in my view, work-life balance is impossible, virtually impossible to achieve. And I'm not saying don't take vacations and don't recharge. But work-life balance is really hard to achieve because we all work, particularly around tax deadlines, 8 to 12 to 14 plus hours a day. And then you sleep. And then you have only so much time. And if you take work and sleep, you're never going to have balance with the fun activities that you cherish and that you want to do. So I believe you've got to integrate them. I learned this being a camp counselor. What better place to integrate work and life than at a camp, playing, teaching, learning with other counselors and learning with other kids. So work-life integration to me is all about doing the things that you do well and doing the things that you like to do more often than doing the things that you don't do well and not doing the things that you don't like to do. And one of the life lessons that I found is most people are very comfortable sharing what they do well and what they like to do with others. I love to do that. I love to ski. I love to mountain bike. Those were the two things John mentioned. I was on What's Your And on his podcast. Those are the two things that I talked about on John's podcast. Now, most people are comfortable sharing the things that they love. But what's more important, I believe, is sharing the things that you don't like and the things that you stink at. Why? Because if you're transparent and open with the things that you don't do well, you're going to find people around you that do them very well. And they can take on what you're not great at, and you can take on what they may not be great at. And together you can be better. So integration of work and life to me is doing the things that you do and doing the things that you want to do every day throughout the business day to integrate what you love with what you're practicing, and then figuring out a way to do less of what you don't like to do by sharing that with others, or actually what you're not so good at by sharing it with others. I think they're incredible, incredible life lessons. So I mentioned I wanted to go to school in Colorado. I talked about it early in my life on the chairlift with friends. And back in the day when I was looking to go to college, you went to the guidance counselor's office and you picked out a college catalog. The college catalog, it wasn't the internet. We didn't have the internet. We didn't have computers. There were books in the guidance counselor's office that showed the different colleges in the different states across the country. This is the cover in 1982 of the University of Northern Colorado's college handbook, to evaluate whether or not you might want to go there or not. And people ask me, how did you end up going to University of Northern Colorado from Massachusetts? Well, it was the only school that accepted me because as hard as I tried, I still didn't do great on the SATs and I didn't have a great GPA. But I did well enough to get into the University of Northern Colorado. And then I ultimately tell them they tricked me. If you look at the mountains in the background here, it looks like they're rising up from the campus. Well, those mountains are more than 100 miles away. And I say it's trick photography that got me to the University of Northern Colorado. But the life lessons that I learned here really is that I grew up in Massachusetts, and Northern Colorado was really in the middle of pastures, in the middle of farm country. And I learned as much outside of the classroom as I did inside the classroom as a result of being and having exposure to people that thought differently. As I mentioned perspectives earlier, people that thought differently, handled things differently, worked differently. It was a great experience that I had as a result of going to school in a place that I was completely unfamiliar with. So the next thing that I have to share with you, in that college catalog, they also described that there was a ski area in Greeley, Colorado. And this was a ski area, all of 150 vertical feet, exactly half the size of the ski area that I went to. There's not a life lesson here other than don't always believe what it is that you read, because this certainly wasn't a ski area in the town that I went to college in. It was a bump at best. The last life lesson, kickball. I really break all of life down into kickball. Most of you, if not all of you, played kickball in either your front yard, backyard, schoolhouse, camp, someplace, schoolyard, someplace in life you played kickball. And I relate life to kickball in this regard. It's resume building similar to resume building for a job, college, advancement in your career. How? Well, if you think about it, in kickball, you're always being evaluated. And I can tell you the individuals that are captains in kickball, they're self-anointed. You go out to play a game and you say, who's on whose team? And somebody will say, I'm a captain. And somebody else will say, I'm a captain. And a third person might say they're a captain. And then they decide who's going to be the top two individuals to be the captain. They're self-anointed. They put themselves out. They're willing to step up for the challenge. And that transfers, and you can identify those individuals in second, third, fourth, fifth grade that step up all the way through their lives. That DNA is there for their life. And not everybody's a captain, and not everybody can be a captain, but those individuals that were self-anointed were. And then they pick the teams. And how do they pick the teams? They look at the resumes of the players. Can they kick well, throw the ball well, catch the ball well, run fast? They have to do everything reasonably well to be picked. That's no different than going from high school to college. You have to do things, good GPA, good extracurricular activities. Maybe you're a student athlete, but you have to do things reasonably well with balance to get into college. And then to get from college to your first job, it's all about kickball. It's another building of the resume, and you're evaluated. When you're on the job, you're being evaluated, just like you were in the kickball field. Every time you went to kick the ball, if you kicked it hard, kicked it far, ran fast, people saw that. In the workplace, people see that. I think we're going to see a poll here. I heard a ding, but I'm not sure. There it goes. Looks like most people are getting that one right. Thanks for paying attention. So ultimately, remember that you're always being evaluated. You're always being evaluated to be picked to be on a team. You're always being evaluated to be promoted. And life is just like kickball in that evaluation process. So next, let's move into out of life lessons in leadership and more into what in the world does the future hold for each of us? We're going to reflect on repositioning, transitions, hard trends, and most importantly, don't limit your thinking. And we've got to think beyond outside the box. To start this off, I'd like to play a short video that I think will help you get into your mindset of thinking very, very differently, because what I'm going to talk about next is more than outside the box, and as tax professionals, things you need to be aware of as you plan for your future.
There was a time in our lives. There was a time in our lives when we were completely fearless, when we knew no boundaries. Imagination ruled, and failure wasn't even a word in our vocabulary. Do you remember that time when we were full of wonder? So when and why did that change? We grew up, we learned, but we learned limits. The world around us taught us to stay inside the lines instead of going outside our comfort zones. Today, they always tell us, think outside the box. But we should all be asking, why does it have to be a box? The fact is, our world is moving at breakneck speed. The accounting profession is going through seismic change. The forces of the new global economy are challenging organizations to disrupt themselves, to adapt, evolve, and prosper. Robotic process automation, data analytics, blockchain, AI. Let's embrace them, make them part of our jobs and our lives. They'll make all of us better. They'll help us create an even more dynamic profession, empower us to rethink the services we offer clients and the value we deliver to businesses. So let's keep pushing our limits, exploring without fear, defining our own world, and let's not be afraid to fail. Let's look for every opportunity to lead our clients and our organizations through these volatile times. Are you ready to do it? Ready to reimagine our profession and our world? Most of all, are you ready to be wonderful?
So in this reimagine thought process, one of the things that I think is really important for all of you to understand are the US government's financial statements and how they impact future tax policy. Very big picture. I had the opportunity to chair a committee that evaluated the federal government's accounting standard setting process, and those recommendations of that committee at the time went to Secretary of the Treasury, Tim Geithner, and they utilized those to help improve the federal government's financial reporting. And effectively, the federal government takes in revenue from tax policy and spends revenue based on congressional budgetary authority. And it's really important to understand those big picture aspects to, in my view, understand the future of tax policy. So let's start with the Congressional Budget Office. In 2019, the actual tax or the actual budget deficit was $1.2 trillion. The US government is on a September 30 year end, so these are September 30 numbers. The 2020 budget deficit estimate is estimated to be $3.7 trillion. Why is it so much greater? Obviously because of COVID and all the fiscal stimulus that's taking place as a result of COVID. And then the Congressional Budget Office puts together a 10-year projection to show the actual budget deficit estimate for the next 10 years, which is $13 trillion. And people often wonder, what is a trillion? And we talk about millions and billions. So let me ask a quick question, throw it in the chat. How many zeros are in a trillion? Anybody can drop it in. Perfect. Nathan, way to go. We got 12, we got 11. The answer is 12. Nathan nailed it. But 12 zeros, what does that mean? How meaningful is that to us? It's just a lot of zeros. I like putting a trillion into the concept of time. 1,000,000 seconds is 11.5 days. 1 billion seconds is 32 years. 1 trillion seconds is 32,000 years. So everything I'm going to be talking about now in trillions in the US government's financial statements, it's 32,000 years of time in seconds compared to only 11.5 days in millions. It's massive when we start talking about trillions. So here, right out of the US government's financial statements are the 2019 revenues. You can see here in the blue, it's other revenue. The other revenue is things like excise tax, unemployment taxes, custom duties, park fees, things like that. They're actually greater than the gray. The gray is corporate income tax receipts, and the white are individual income tax receipts and payroll tax withholdings. So the federal government collected $3.6 trillion in 2019. And one of the things I think you'll find fascinating, hopefully as tax folks, if you see the corporate tax receipts, 339, 294, 299, down to 208, up to 322. What's happened to get the tax receipts up to 322, obviously, is a reduction in tax rates from 35% to 25%, and more companies paying tax in our country. We know that if you have uncompetitive corporate tax rates, US corporations will tax structure their way out of doing business in our country and will have much lower cash collections. And I'll talk about that more later, but the emphasis here is the federal government funds the majority of its revenue through individual income taxes and payroll tax withholdings at $2.9 trillion. Here's the balance sheet of the federal government. On the right side, we see total liabilities of $26.9 trillion. That's made up of other, 1.6. We've got federal employee and veterans benefits, 8.4, and federal debt. So those are the debt securities, US treasuries that the government floats to fund its operations, to total $26.9 trillion. While I'm talking, what isn't there? What's not reflected as a liability? Put that in the chat box, anybody that can think of the US government, what's not a liability reflected here. On the asset side, that's right, Mitchell-Clark, Social Security, we're going to talk about that. It's not reflected in the $26.9 trillion. On the asset side, we have $3.9 trillion in assets, almost $4 trillion. Put in the chat, what do you think the largest asset is the US government holds in its financial statement? The largest asset the US government holds on its financial statement. Real estate, land. Keep it coming. Property and equipment. So the largest asset the US government holds on its financial statement is actually student loans receivable. $1.4 trillion of the $3.9 trillion are student loans receivable. The next largest asset that didn't get any votes is property and equipment. And one of the things that's really important to understand here, interest rates are at an all-time record low. The interest-bearing debt is almost $17 trillion. A 1% rise in interest rates on the federal debt would be an additional $170 billion a year. 2% double it, 3% triple it. Because we have all-time record lows of interest, we're not spending as a country a lot of money on interest. And in my opinion, we're not going to see interest rates rise because most federal governments are debtors and they can't afford to have interest rates rise. So let's look at the social insurance obligations. This is a footnote disclosure. The actual liability for a corporation under the FASB standards or for a state and local government under the GASB standards, generally accepted standards for governmental entities, this obligation would be reflected in the financial statements as a liability. This is the present value of the outflow of cash to pay Social Security obligations, net of the cash flow that comes in from payroll tax receipts. Discounted back. So at 9/30, 2019, $80 trillion. Not reflected on the financial statements. The US government follows the FASAB standards, the Federal Accounting Standards Advisory Board standards. It's the only entity that follows those standards, and the federal government effectively produces its own standards that it follows for financial reporting purposes. So what does it look like in totality? If we take the closed group social insurance obligation of 80 trillion, the US liabilities of 27 trillion, they total $107 trillion. Household net worth is also something the Treasury puts together in what's referred to as the Federal Funds and Flows Report. On a quarterly basis, they produce the net worth of every citizen in the country, all not-for-profits, all foundations. So this includes all of us on this webinar, Mark Zuckerberg, Bill Gates, Warren Buffett, and every other billionaire in the country. Added together, their net worths equal $114 trillion. On the left, the $107 trillion does not include state, local, county, municipality debt. And as a result, the debt obligations of our country, including the state and local debt, are virtually equal to the household net worth. So we're clearly at a tipping point. And what I mean we're at a tipping point, our obligations as citizens of the country equal the assets that we all have. And they effectively wipe each other out. And every citizen in our country, if we allocate the debt of our country to every citizen, has a net worth of zero. So what do we need to do? Well, it starts with balancing the budget. We need to increase revenue, which deals with tax policy, decrease spending, which deals with program policy, and then create a surplus for decades to pay for what's not been paid for in the past. And we have to do it and balance it with not inhibiting economic growth in the future. So some revenue considerations. And these revenue considerations I'm going to talk about are things that are my revenue considerations. They're not those of BDO. They're not those of the AICPA. They're certainly not those of my partners. And I can tell you when I go through these revenue considerations and expense considerations, if you put this in a platform, you would never be elected president with a platform that I'm going to throw out there for revenue considerations. So let's start with the first one. We have to evaluate tax policy and tax practices for economic and workforce changes. And I'm going to talk more about that, but the reality is we need to be able to evaluate tax policy so that the workforce challenges and reduction in workforce will enable us to collect enough tax revenue from all sources to pay our bills. And I'm going to talk more about that as we move on. We have to increase the effective rate on the highest earning individuals and broaden the tax base. Now, this isn't something that anybody really wants to do, but the reality is we've got to put everything on the table for consideration in order to create not just break-even budgets, but surpluses into the future. We have to evaluate corporate tax rates. What's the long-term implication of a 25% tax rate? And if we create a 25% tax rate and there's sustainable knowledge, one of the issues we have in our country is corporate tax rates change very often. And as a result of that, there's no certainty by corporate taxpayers as to what their tax obligations are going to be. If we could create some longer term certainty of what the tax rates are, there would be more certainty around that, and we would have more companies not tax structure their way out of doing business in our country. And then finally, the tax gap. The tax gap's unreported, underreported taxable income. The last time the IRS did a study on this, they circulated that study in 2016, and they identified $406 billion of unreported and underreported taxable income. And that tax gap, in my view, is largely a result of having a paper-based tax system rather than a technology-based tax system. So we have to improve the technology associated with our tax system. Spending considerations. We have to raise and consider raising the Social Security age indexed for life expectancy and consider a needs-based model. Does it make sense for billionaires to get access to Social Security? We have to ask ourselves that question. So I'm going to ask you a question again here now. When Social Security was enacted into law in 1935, they looked at the 1930 census to determine the average life expectancy of citizens. What do you think the average life expectancy was of citizens in 1930? Drop it into the chat. How long did people live in 1930? 50, 62, 76, 50, 58, 62. So here's the answer. Great responses, 65, 68. The answer is 58 for men, 62 for women, and you got the benefit if you reach the age of 65. So Social Security was enacted into law to allow individuals that outlived life expectancy to have a safety net. And what Social Security has become is a safety net for retirement. It's not a life expectancy payment today. It's really a safety net for retirement. And we have to evaluate how we manage that going forward. Same with Medicare and Medicaid. We need to look at what are the total benefits and should it be needs-based? And how do we evaluate the moral decisions of near-death medical treatments? I don't have an answer for that, but we have to evaluate that. And we have to do a lot of work in reducing the underlying costs in the healthcare system to fund medical benefits for citizens in the country. For sure, we have to pay down the debt before interest rates increase. An increase in interest rates will be a disaster for the ability of the country to collect enough revenue and meet its obligations, because when you're paying interest, you get nothing. It's just interest. And then finally, we need an evaluation model of government programs and mandated sunset review on our programs being administered appropriately. Are they effective? If they should have a return on investment, is the ROI appropriate? And we have a Gazinta model. Anything that goes into the payment streams of the federal government generally doesn't come out of the payment streams of the federal government. They all need to be evaluated. One of the places you can go, and I would ask that you go and look at, is What's at Stake. What's at Stake is a program that I actually, when was Social Security enacted into law? Thanks for popping the polling question up there. 1930s has it, and that's correct. So the What's at Stake program is a program that I created after doing the work on the US government's financial statements and working with the policymakers on the standard setting process of the federal government's financial statements. And the program, What's at Stake, was put in place to educate policymakers, members of Congress, other elected leaders about the financial statements, what's in them, what's not in them, and how they can be better utilized to set policies, not just tax policy, but spending policy into the future. So you can go to the AICPA website, check out What's at Stake. There's a bunch of videos there and other detailed information on this. So now let's move more into the evolution of what's going to happen going forward with technological advances, how tax policy will really migrate and change in the future, and how tax services will be impacted. This is before automation. We see people in the factory, on the factory floor doing work. After automation, we don't see a person on the factory floor. It is 100% robotic. And when I talked about the country funds tax policy, the taxes, individual income tax and payroll tax is what funds the federal government. And if there's fewer individuals working, how do we evaluate tax policy to manage through that? And many of you are probably aware that Bill Gates predicted the pandemic that we're in with the virus spread. He also predicted what could happen before automation, and this is on a trading floor, and this is after automation, what a trading floor looks like, and what computers and robotics are doing to the workforce. So I'm going to share with you that video in a moment, but the Bill Gates video in a moment. But what this is doing is it's driving down labor force participation. We all know about the unemployment rate. The unemployment rate deals with near-term individuals that are unemployed. The labor force participation rate is individuals between the age of 16 and 64 that want a job but don't have a full-time job. So we can see that it's dropped, and you can see what's happened as a result of COVID and the pandemic. There was a precipitous drop that went from 63% down to 60%, and it's climbing back up. But since the 2000 year, the labor force participation rate has been dropping steadily, and it really bounced around 63%. Even when we had unemployment rates of 3% in our country, we have chronic unemployment, which are the individuals, if there's a 16-year-old that's dropped out of high school, they would be counted as, and they didn't have a job, they would be counted as an individual that wants a job that doesn't have a job. If it was a 16-year-old that had a job, then they would be in the percentage of the 60% plus that do. The reality is we need 80% of our workforce working, the 80-20 rule. We cannot function as a society and only have 60% of the workforce, or the low 60% of the workforce working, and the low 60% of the workforce being taxed, paying income tax and unemployment tax or self-employment tax if you're self-employed, and funding 40% of the citizens that aren't working. We need to get this up to 80% by retraining, retooling, and re-engineering the workforce. About half of the current activities today, about half of the current activities today are able to be displaced with current technology. That would be 1.1 billion workers affected worldwide. Why isn't this happening? Well, it's going to happen in the future, but the reality is there's major developments that still need to take place with technology and automated and augmented intelligence. When will it happen? This McKinsey study that I'm citing states that it will likely happen in the 2035 time period, or depending on adoption by businesses, it could be delayed out to as long as 2025 or 2075. But the reality is technology today can displace workforce as we see it. So I mentioned the Bill Gates video. Let's listen to this and hear his thought.
Right now, if a human worker does, $50,000 worth of work in a factory, that income is taxed. If a robot comes in to do the same thing, you'd think that we'd tax the robot at a similar level. What the world wants is to take this opportunity to make all the goods and services we have today and free up labor, let us do a better job of reaching out to the elderly, having smaller class size, helping kids with special needs. All of those are things where human empathy and understanding are still very, very unique, and we still deal with an immense shortage of people to help out there. And so if you can take the labor that used to do the thing automation replaces, and both financially and training-wise and fulfillment-wise, have that person go off and do these other things, you're...
Whoa. Sorry about that.
Right now, if a human worker does, $50,000
I'm going to try to move it forward.
Fulfillment-wise, have that person go off and do these other things, you're net ahead. But you can't just give up that income tax because that's part of how you've been funding that level of human workers. Some of it can come on the profits that are generated by the labor-saving efficiency there. Some of it can come directly in some type of robot tax. I don't think the robot companies are going to be outraged that there might be a tax. It's okay.
Sorry about that on the video. My hand hit the mouse and the video went a little haywire there. We're going to have a little bit of time left over that we can talk about what other tax policies and tax strategies could the country put in place similar to what Bill Gates is recommending, and I'd be curious to get your input. When I usually give the talk on future tax policy and future tax strategy, we do this for multiple hours of time. And obviously we have limited time here, but I just wanted to kind of wet your whistle, so to speak. So what does this all mean for us as tax professionals? I think it's actually exciting. If and when we have massive overhaul with tax policy, we are the keepers of the knowledge as it relates to administering tax policy and navigating that. And if we look at the spectrum of implications of technology on the future of finance, for the most part, what we're doing on a daily basis is managing others and applying expertise, the far left side of this spectrum. They're they're not easily automatable. So the majority of what we do is never going to be replaced with automation, applying expertise and managing others. When we move over to data processing, the actual tax return preparation and compliance exercise, we know today, when I first started working in public accounting, tax returns were prepared manually. Then they moved to computers. And now we have scanners and robotics that are doing tax preparation. They're already being, data processing and human capital hours are already being pulled out of those mundane tasks that nobody wants to do anyhow. So I believe that we will continue to be a strong and vibrant force in applying expertise, particularly as tax policy continues to change. I think we're having a poll come up real quick here. Thank you for that. And I'm going to show you one last video before we kind of wind things down with my thoughts on how you move forward into the future. If I can do this without getting the mouse to slide across the table. This is, I know most of the firms have implemented significant robotics, robotic process engineering, and strategies to take hundreds, if not thousands of hours out of the preparation process. But I thought I'd share this video because this is actually what's happening from a tax transformation standpoint.
A retailer's entire multi-state submission could be invalidated by a single clerical error. Now, everything is verified automatically. Aggregating reporting data used to take the analysts 3 to 4 hours a day. A retailer's entire multi-state submission could be invalidated by a single clerical error. Now, everything is verified automatically. Aggregating reporting data used to take the analysts 3 to 4 hours a day. Today, they can actually do the job they were hired to do. Determining tax credit eligibility across dozens of states used to take hundreds of hours. Now, it takes less than 20 minutes. The tax transformation team at BDO helps companies of all sizes in virtually all industries handle their tax responsibilities faster, more accurately, and cost-effectively. Streamline processes that take too long. Automate processes no one wants to do. BDO can help you improve the way any tax-related activity gets done. A tax director used to spend hours collecting the same data for the same report every single Friday. A bot was built to upload the data directly into the PowerPoint slides, so his weekend can start when it's supposed to. A restaurant chain used to submit its sales tax returns manually in hundreds of jurisdictions across multiple states. Software automated the entire process. saving the client nearly $1 million. For some clients, it's about accuracy. For others, it's about agility. For any client, the BDO Tax Transformation Team can make sure the entire tax department is running as efficiently as it can. Our ideas are practical. Our solutions possible. Your tax professionals vary.
So I couldn't see the video play. I don't know if you could or not, but you got the gist of it, taking thousands of hours out with technological advances. So if this is the case, what do we need to be prepared for? And I thought I'd share with you, this is a piece that came out of a study that the World Economic Forum did, and it's the top 10 skills needed in 2020 and beyond. And you can read them here, all 10 of them, but in my opinion, the two most important are critical thinking and cognitive flexibility. The others are all very important, but critical thinking and cognitive flexibility are, to me, really, really important. And I'll share with you what I mean a little bit more about cognitive flexibility. It's having an agile mindset. In my life, I've only had to learn and unlearn really one time, when we moved from a paper-based system to a computer system. In your lifetimes, in your professional careers, you're going to have to learn and unlearn multiple times with multiple technologies, with multiple tax policies. And I think those of us that have the ability to learn, unlearn, relearn on an accelerated clip with an agile mindset are going to be superior to those that don't have the ability, that can't change, that aren't adaptable. So adaptability, critical thinking, agile mindset, to me, and technological advancements, to the extent that you are looking to stay relevant and be picked for the kickball team. Focus coursework and continuing education around technology displacement, futurist, the future of the profession, and how you can have an agile mindset. And with that, I'll bring this to a conclusion and leave you my contact information. Feel free to reach out to me anytime via email. If you call, it'll go to my email, so just shoot me an email. I do put out cutting edge accounting stuff in LinkedIn, so feel free to connect with me on LinkedIn. And apparently I'm reading here, Ken, I saw your Q&A, wanted to make sure you got your answer. Shorter video piece. I'm not sure what the question was because I'm only reading chat.
That was just a Q&A that Ken had asked. That was for something for my session.
Oh, thank you.
I'm going to jump in here if anybody's got any questions, throw it in the chat for Greg. Just figured I'd jump in here and
thanks, John.
For landing. Yeah, sorry. But no, that was really interesting though, especially with the tax policies and the taxing robots. We're taxing people for the income tax, but then when they're robots, you're not. But then do you feel like that inhibits innovation any at all?
The reality is it could inhibit innovation, and it's a balancing act. Companies today, if they're putting robotics in place, they're going to be getting R&D tax credits associated with that. But the reality is we've got to retrain. I mean, John, the biggest issue we have as a society right now is only 60% of those that want a job are actually working in a full-time job. And that's a problem because not all of them are going to be able to get to a job. Not all of them are going to be able to retrain. But the reality is if we can retrain and create skill sets and situations for the workforce to retool, that will go a long way in solving the economic challenges that we have. And then from a tax standpoint, we're going to have to do something that blends income tax, national sales tax, but the national sales tax is going to have to be something that doesn't just tax food, clothing, and things that generally lower income people spend all their money on food and clothing. And the reality is wealthy people spend very little money on their food and clothing. So you've got to have pragmatic approaches to tax policy. And all those that are on this program and listening to this, in their careers, all of these things are going to have to happen, and they're going to change big time in their professional careers as tax professionals.
Yeah. No, that's a great point. All right. If anybody has any other questions for Greg, feel free to throw them in the chat. I'll ask him, kind of do it that way. James says, great thoughts. Thanks for sharing.
My pleasure, James. I'm going to stick around for apparently there's a networking session. I don't know how I get into it. If I just stay on this.
You're already in, man. You're already in. Apparently I'm I'm a bit of a gatekeeper. So I'll let you in. You just slip me a 20 and then we're all good. And then there we go. It's all good. Well, thank you so much, Greg, for being a part of this conference. And that was really fantastic. So